All right, let's talk Metropolitan Bank, or MCB. Their Q4 2025 earnings report just dropped, and wow, the market really set up and paid attention. We're going to dig into the anatomy of what was, let's be honest, a total blowout quarter and figure out what's driving this stock.
So, right out of the gate, this is the number that just lit up the screens, $2.77. That's the GAAP earnings per share. And believe me, this was the headline figure that got everyone's attention and put MCB on pretty much every trader's radar.
And here's the context for why that number was such a big deal. You see, MCB didn't just beat expectations, they absolutely shattered them. We're talking a 70-cent beat on earnings per share and more than a $5 million beat on revenue. I mean, that's not just a little outperformance, that's a massive beat. This was a real statement quarter, the kind the market simply can't ignore. So, the big question is how they pull it off.
Well, let's get inside the margin machine, because that's really the engine that drove this whole beat. Okay, check this out. 4.1%. That's their net interest margin, or NIM. Now, for those of you following the space, you know how tough it's been for regional banks. But MCB, they actually expanded their margin, not just year over year, but quarter over quarter too. This, right here, is the absolute heart of the bank's earnings power. It's huge.
And you can see exactly what that strong margin does for the top line. I mean, just look at these growth numbers. Their net interest income, which is, their main source of revenue, jumped over 28% from a year ago. That is some serious fundamental momentum, the kind of stuff that really justifies a big pop in the stock price.
But you might be asking, okay, great growth, but how are they paying for it? And that's maybe the most important part of the story. Management was super clear on the call about this. They're funding all this new loan growth with core deposits. Think about that. They're not going out and borrowing expensive money on the wholesale market. This is a sign of a really healthy, really stable franchise with a loyal customer base. It's a huge strategic advantage.
All right, so that was the fantastic quarter they just had. But as we all know, the market is always looking ahead. So let's talk about management's game plan for 2026.
And boy, did management come out swinging with a confident outlook. They're guiding for another $800 million in loan growth. Again, all funded by deposits. And here's the kicker. They think they can hold that net interest margin right around 4.1% for the whole year. The punchline to all this? They're targeting a return on tangible common equity of nearly 16% by the end of the year. That is a top-tier profitability metric, folks.
And this isn't just numbers on a spreadsheet, right? This is real, tangible growth. They're putting boots on the ground. They just opened a new branch in Lakewood, New Jersey. And now they're making a big push into Florida. We're talking Miami and West Palm Beach. This shows they're actively deploying capital into some really attractive growth markets.
So naturally, someone on the call asked them about mergers and acquisitions. Are you going to go out and buy another bank? And their answer was pretty telling. They basically said they're focused on disciplined, organic growth. In other words, they think they can create more value for shareholders by building the bank from the inside out rather than just buying growth. That shows a ton of confidence in their own model. Okay, so far it all sounds pretty perfect, right? But no quarter is flawless. There was one little red flag that had analysts and the market asking some questions. And that was all about credit quality. So let's dig into that.
And here's the number that made some people pause. Non-performing loans, or NPLs, as a percentage of their total loan book. Look at that jump. It more than doubled from a year ago, up to 1.28%. Now, in this economic environment, any hint of credit problems gets put under a microscope, so this definitely caught some eyes.
But, and this is a big but, management came right out and addressed this head on. They were very specific. They said, look, this increase is basically tied to just two specific multifamily loans. And not only do they expect to take little or no loss on them, but they expect the whole thing to be resolved by the end of this quarter. So they're essentially telling the market, hey, this isn't a systemic problem, it's a contained issue, and we're already handling it.
Okay, so let's put all the pieces together. We've got a massive earnings beat, we've got super confident guidance, and we have a credit issue that seems to be pretty well contained. So, where's the stock go from here? That's the million-dollar question.
And this really is the central question for any investor looking at MCB right now. The stock has already made a huge move on the back of this report. So the question is there still juice left in this trade? Or is all the good news already baked into the price?
Well, the good news is we have a pretty clear roadmap of what to watch for. There are three key catalysts coming up. First, management absolutely has to deliver on their promise to resolve those problem loans this quarter. No excuses. Second, the next earnings report for Q1 has to prove that this deposit-funded growth is for real and continuing. And finally, the big one. Everyone is going to be watching their investor day on March 3rd. That's their chance to really sell this multi-year growth story to Wall Street.
All right, so here it is, the official Talk Ticker's take. Our prediction is that management pulls it off. They're going to successfully defend that 4+% margin, they'll hit their loan growth targets, and that's going to drive earnings even higher than the street expects. Now, what about the stock price? We think it probably chops around here for a bit, digests this big run-up, but we see a real potential for a breakout after that investor day in March once the market gets full confidence in the longer-term story. For that reason, our rating on MCB is outperform.
And that brings us to our outrageous but plausible trade idea. Now, if you're really a believer in this story and you have a high conviction level, you could consider looking at long call options on the stock that expire in March. This is basically a direct bet on momentum building into that March 3rd investor day and a positive reaction from the event itself. And of course, we have to say it, this is not financial advice.